Good morning. It is a Friday, October 10th, 2014. It's about 30 minutes before the market is going to open for trade here. This is the S&P 500 futures chart. Doesn't even really do it justice. We were pulling back from our record highs all the way back in September. We pulled back Thursday to lows before rallying into the jobs report. And then we started the week off with the GTAT bankruptcy, continued weakness for the market. We hit our lows on Wednesday, just before the Fed minutes. We rallied some 300 Dow Jones Industrial Average points, and then gave it a whole back yesterday in a really telltale reversal of what this market's been doing. And we see it this morning off our lows on the S&P 500 futures, trying to work our way back. But it does not look good for me from a long-term perspective. You see a 20-year monthly chart of the S&P 500 ETF, the spiders. And you can see this red candle. I know in the whole scheme of this massive rally we've seen since the lows in 2009, March 2009, not such a big deal, but it does break this Abenomics trend line. That's a big deal. And so I think you have to be biased either for a little bit more downside or just to sit back and let the dust settle. And you can look at the IWM as well, is broken to the downside. Now, it's funny because these charts prior to yesterday's opening bell were looking pretty good. We were above the support line here in this channel. The SPY had made its way back up into this. And let me just pull up a short-term chart and show you what I'm talking about. We had made our way all the way back up. See this candle? And then we reversed that and then some. So it's just some nasty action in the market. Indecision. One thing I would look at, and if you look from the long term, we look at some of the moving averages. We could also look at the relative strength index. We're getting pretty oversold here. It's one thing to look at. Back in the middle of 2011, this was the debt downgrade, the U.S. debt downgrade. We felt we got pretty oversold, and then we had that rally, a significant rally from there. So, it's something to keep an eye on, although this trend line break is pretty concerning for me. And I've been, riding this trend. I might not like it. I might not like all what the central banks are doing for the future of our country, but we're here to make money, and the money's been made to the upside. And perhaps this is a trend change. This could be the start of it. Something to keep an eye on. And certainly, I'm not going to be going aggressively long until we see some sort of, change there, either back above, which is possible. Hey, we could move up 500 Dow Jones Industrial Average points today. You never know. They come out, Federal Reserve. Somebody says something or somebody knows something. There's no telling. So the market could change on a dime as it's done the last couple of days, or we could just continue to the downside. And right now, that's what it looks like. It looks like once we broke this trend line here in the small caps, we're going to get back down under 100. And so that's what you're going to have to trade for, or sit on the sidelines if you're a bull and let this just come to play. We look at support here. Long-term supports of 150 is the Dow Jones Industrial Average, the diamonds, which tracks them. And you can look, this is the breakout. I talked about this in November of last year. I pointed out once we broke above it, you can see the breakout we've had is now you're looking at that's long-term support, because the financial crisis and the internet bubble back in 2000 all marked levels of resistance. We broke through that last year, which is bullish. And now we're starting to pull back. So if we're looking at a significant pullback, 150 would be where the selling would ultimately stop on a really sharp pullback. I'm not even sure we're going to get that far. But let's look at some individual TLT, which is broken now pre-market above that 1950 level. It worked out great for a couple days this week, and now it's at 1960 here pre-market. You can see it's trying to break 1950. We'll see what happens there when the bell rings, if we're over that level, if it gets smacked back down. And to me, the only thing that really could save this market here in the short to medium term is the Federal Reserve meets at the end of this month, and you're seeing the U.S. dollar rally. Here's the VXX, which has moved significantly off its lows. You're finally starting to see that move again. This is something that's been beaten down, obviously. If you were traded VXX, I mean, look at split adjusted 7,500. But if the Federal Reserve meets the end of this month, and they're seeing, what are they seeing? Lower prices. Inflation again is coming in lower than expected. That's that gives them the opportunity to try and again reinflate asset prices. We'll see what happens there. I mean, if the U.S. dollar is gaining strength, that's not a good thing. I mean, at least in their view, their opinion. So let's look also at Google, which is nearing support here. Here we go, 555. So we can get down to that level there. This is going to be a great spot for Google to see a nice sharp recovery. Is active support at the 550 level. So that's something you want to look to get into. And also Apple. Icon says it's a $200 stock. We'll see. Depends how much stock they can buy back, I guess. But if you look, again, Apple, very bullish here. Look at this consolidation. I mean, that's a perfect wedge here that's forming, and it looks poised to come to about the 110 level over the next couple weeks. All right, UBB here, optionmillionaires.com. Let's just look at a couple other charts. Whole Foods finally broke. Yeah, disappointing. And we'll see. It broke briefly back a couple months ago, but it broke again. The 37.50 level is a key support level. DDD continues to melt lower. It's under 40 here pre-market. So that broke strong, former strong support. Let's look at some other names. Priceline broke support yesterday. So that's very bearish. If you want to pull up charts and you got to look at them, I liked buying them on the way up, and even at support levels. Once we break support, you just either got to step aside, buy some puts. You can't keep banging your head against a wall, fighting it, because that's just the way this market is right now. Seems like names are just getting sold off. But again, also watch from a long-term perspective here. Haven't been this oversold since the middle of 2012 on Priceline, which marked a nice bottom, supported about the 550 level, and moved up 200% from there. So this is something to keep an eye on. Caterpillar, which is like the IWM. Look at IWM, was contained in that channel, broke out of it. Caterpillar tried to break out to new record highs, was rejected at this triple top. It's actually ended up being a quadruple top, and it looks poised to pull back to about the $75 level. We'll see if that holds true here. All right, UBB, the market's going to open a little bit. I just wanted to do a brief market video. It's been a rough couple weeks really for me, because I've been trying to get this market to recover. I've been trading it for a recovery, and it just hasn't been happening. And now I wrote a post up at the blog at optionmillionaires.com. I got to raise that white flag and just say, you know what? My thesis for higher prices is just not going to happen right now, and until we see something change, I got to switch directions. I'm not the perfect trader, and I'm going to admit to you when I'm wrong. So we'll see. Maybe that marks a bottom for stocks. Me calling, and you can see, since I've said that, the futures have rallied. I wish I was that important. So, all right, UBB, Option Millionaires. I'll see you in the chat room. Everyone, hopefully have a great trading session, and if I don't see you in the chat room, have a great weekend. Goodbye.